All right, guys, so I have an illustration to really drive home the concept of the numbers and the colors for these pairs, okay? So let's say, for example, we're trading the Australian dollar versus the New Zealand dollar. The Australian dollar is the first currency, and if it's green, then we're hoping price to go up. The green number simply means that the big banks and the institutions have more longs than shorts, which means it should drive the Australian dollar up. However, we don't just trade one currency, we actually trade two currencies, which is a pair. The second currency is the New Zealand dollar, and we can also see that as green, and it's positive 24,000. But you see this finger is pointing down. So some of you who are confused may say, well, why is the finger pointing down if they have more buys than shorts? Remember, the positive number is green, which means the big banks and institutions have more buys. So why is this pointing down? This is how it works. You're trading two currencies. The first currency, again, is the major currency, okay? So we're hoping price goes up because it's green. That means the big banks and institutions have more longs than shorts for the Australian dollar. They also have more longs than shorts for the New Zealand dollar, except this is pointing down because it's reversed. It's like it's flipped on its head. This is what I mean. As I flip this, and let's say the New Zealand dollar was actually first instead of the Australian dollar, you see how the New Zealand dollar now finger is pointing up? So the reason why the New Zealand dollar finger is pointing up now is because it's the first currency. It's still green. And so these institutions still have buys or more longs for the New Zealand dollar. So it's still pointing up. That's why it's pointing down when we flip it, is because they're doing opposite directions. They're opposite directions, but they're still both longs. So typically it's best to always trade two opposing colors, one red and one green. But if you do happen to trade two greens, you always want to trade in the direction of the bigger green. So whenever you see two greens, think of this in your head. You have two colors and they're fighting for that color. So they're pulling against each other. And whoever has the biggest is going to win. And in this case, the New Zealand dollar has the biggest. So you will want to short sell the Australian dollar and the New Zealand dollar because their big outweighs the Australian dollar big. Now, let's do this here. I'm going to make this red, and now the New Zealand dollar is green. So remember, red means sell when you are the base. So I'm going to point the finger down, and green also means down when you're the second currency. So now you have two fingers pointing down, which also helps both currencies head down. All right. So I'm going to explain it to you. The big institutions have more money shorting the Australian dollar than they do buying. That's why it's red. And also the big banks have more money buying the New Zealand dollar, and they're pointing that way. So because the Australian dollar is the first currency, then you would want to short because now this is also helping price head down. So it's like you're trading two different currencies. You're now, in this case, you're trading a weak currency headed down versus a strong currency, and they're both pointing the exact same way. So the New Zealand dollar is actually helping weaken the Australian dollar. So the whole purpose of trading currency is that you're trading a strong currency versus a weak currency, and you always want to trade towards the stronger currency. So in this case, since the New Zealand dollar is strong, it's pointing down, I'm going to sell. And since this is weak, which is pointing down, I'm also going to sell. So I should see a lot more volatility to the downside because of that. So I just wanted to throw in this brief visual aid, and I'm hoping that it helps you guys because the colors could be tricky. Let's go back to the bar chart and let's take a look at it in real time. So here's our example here. Let's take a look at the New Zealand dollar because this is the only green one that I see. We don't really trade the South African rand or the Brazilian real. And like I said, the US dollar index, I don't really like to trade the COT report because I think it gives me false information. Just giving you guys the information that I've learned trading COT for some time because it's an index, not a currency. It consists of a lot of different currencies. These are just currencies, so it's a little bit more pure. So I'm going to trade the New Zealand dollar, which is green, and let's just go against the euro, which is red, okay? So remember, whichever one goes first. So with this pair, it's usually euro first and then AUD. So what I should expect, since euro is first and it's red, should be headed down. And then the green is the second currency, which is positive. They have more longs than shorts, which is also headed down because it's the second currency. When it's green, you want to trade down or point down. So this should be helping one another. The euro headed down. The New Zealand dollar is also headed down. Let's take a look at it. Euro AUD, So guys, if the COT report so far, what you're learning from this content is intriguing to you, and you really want to understand what the big boys, the big banks, the hedge funds are doing, I suggest that you guys look into the COT course that we have currently in the description below. And I also even commented below with that tagged and pinned it. So if you're interested in it and you want to use this as extra confluence, actually looking at the hard numbers that the big boys are trading, they send to the government website, we retrieve it, make it identifiable for you simply using red and green colors, making it super easy. Feel free to join our lifetime course in the description below. You must have Discord access and you will have access to this for a lifetime. This has changed my life as a Forex trader and also some of the lives of those who are in our Lifetime Academy because we talk about this as well. But this course is exclusive to those who are truly wanting to learn from A to Z how to obtain those numbers from the big boys and then simplifying it, simply making it as easy as green and red and knowing how to trade it. So I hope that this is beneficial for you. Feel free to reach out to me and comment below if you have any questions. I'll be more than happy to answer them for you. Now, back to the video. And it did exactly what it said. So again, remember, this comes out on Friday. You typically want to start trading it on Monday, especially for swing traders. Here is that Monday. You can see my cursor down here, Monday, the 22nd of April. And then you can see that drop, and drop some more. Now, again, I can't stress it enough. We'll talk about it in a later video. You want to make sure that you mix this with support and resistance. So if I was looking at this on, let's say, Sunday before Monday came out, this would clearly be a resistance zone. This happened on Sunday. This white candle happened on Friday, actually. It wicked up here. This is also a nice resistance zone where candles was blocking here. This is our ceiling. This is our ceiling. So I have multiple confirmations here all along here. This was Friday. Now I'm mixing this with price action. I don't want to just throw on a sell just because the COT report says it. I want to sell based on price action, and then it gives me more probability that it's going to drop. And so on Friday, price started here at the bottom, shot up, it wicked, and it closed right here. Okay. So now it's up to you. You could have waited to see if price will come back up, or you could have entered early on that Monday or Sunday night and sold here, knowing that price could possibly come back up here. You'll just be in the negative. If I get my measuring tool from here to here, you'll be in the negative about 65 pips or so. But you know, according to the COT report, because this is the real data that the banks submit, is going to begin to drop. And it did just that. Day one, Monday, Tuesday, Thursday. All right. And it depends on how long you want to sell it. So if I did something like that, I would have been in profit from here to here, 135 pips. So that's not a bad risk to reward. Versus here, if I went, it would have went against me, negative 70 pips if that was the case. If it came back up, but it didn't. But that is a good risk to reward. So you can see how I coupled price action, looking left for clues, determining my resistance, along with the COT report, stating that the big banks and institutions had 20,499 shorts, along with the New Zealand dollar, which had 1821, which also helps push the currency down. So you see how I tied all of that together to make that determination to sell. All right, I'll see you in the next video. And guys, if this sounds foreign to you, I suggest that you watch the COT report step-by-step video that I've done a couple years ago. It has currently about 50,000 views, and I think that you'll be blessed with. It talks to you how to access the website from the US government and translate it to these green and red numbers that I've created to make it easy for you.